Hello everyone. Welcome to your Daily 5. I'm Leslie Jouflas of Trading Live online, and this segment is going to be for September 29th, 2023. I have to record it after the close on September 28th. So by the time it's posted, the market might be into a couple or a few hours of trading on the 29th. But I believe that all of the analysis is still going to be relevant. So I'm starting out with this slide today. I just did a presentation in Las Vegas. It was the first one I've done live in several years, so it was really fun. It was sponsored by FXE Evolution and the Chartered Market Technicians Association. And they had just a great lineup of speakers, but also the attendees there. I don't think I've ever seen a group of attendees that were so focused in on every single speaker. And we all had different perspectives of how we approach the markets. So I think it was a really successful weekend and full of great presentations. So one thing you might have heard me present on this before, but harmonic patterns plus classical technical analysis. And there are some differences between these two approaches. And so today in the analysis of the S&P 500, I'm going to be pointing out just a couple of those so you get an understanding of that. But most importantly, in my philosophy of trading, I think was best said by Jesse Livermore. There's only one side to the stock market, and it's not the bull side or the bear side, but the right side. And we want to learn to be on the right side of the market. And that's really what my strategy and what I teach is all about. So let's move on now and get to some of the current uh, charts and timeframes on the S&P 500. I'm going to start out with the SPY monthly. Now, on September 13th, you can look back on this segment on your Daily 5, and I did present that the title of that was "Where Are the Markets Headed?" So we were back over right up here around this high, and in that video, I had said that I think there's going to be more downside to come. So we have gotten more downside since that presentation. So looking at this, I've marked in, across the highs right here, which this was coming into a resistance area. So it wasn't too surprising that the market had a turn to the downside. So now the market has had a couple of, this is the monthly. We're not quite closed in September. Let me spread this out a little bit. So, we don't know exactly how this is going to close. Let's see, Friday is going to be the last trading day of September. I believe that's right. I'll check my calendar. Yes, it is. And then starting next week, we'll be coming into October. So we'll take a look at this at the end of the week and see how this does close. But right now we've got bearish candles on the chart. The bearish candles in Japanese candlestick theory never tell us how far a price might go. All it does is forecast that there's likely to be more price movement in that direction. So this line right here, this is outlining this big congestion area where the market on the S&P futures was the 4,200 level, and the market was trying really hard to get through it, and it finally broke through and rallied up now to this resistance point. So I pointed this out before, but I think it's important to note that there were a lot of opens, closes, or open, close. We had an open here, we had a high here, we had a close, an open, a high, a close, and another close right on this price level. So this is on the SPY that's just above the 4,100 level. 4,200 to 4,100 and in the S&P 500. I'm going to show you on those charts in just a minute. So if the market declines further, we really want to be watching to see how this holds as a support area. Let's do a quick Fibonacci retracement and see where some levels are. I'll use that low up to this recent high. And you can see that the 0.50 point and the 382 retracement are very close to this support level here. So that's on the SPY. It's between 403.75 and just about 417. So you might want to put those in as support areas. I always have a notebook where I'm always writing down support and resistance levels. One thing that concerns me a little bit, but the price action is the most important. It doesn't matter what concerns me or you or anybody else, is the price is going to tell us. But the RSI on the monthly chart. So back here in 2022, it bottomed, and this is when the market turned around late in the year and rallied to the upside. And you see this dashed line right here. Well, this was drawn in on this chart long before this RSI reached up. This is going way back, and you can see how it captures some of these areas where there's turning points in the RSI. So right now the RSI is turning to the downside. So if this is oscillating and heading towards this downward support, then we're likely to see more downside. In order for a really strong upside to occur, the RSI's got to really get above this point here and this little point right here. So they're very, very close together. So that's the current resistance level on the RSI. This support line right here, the low on the RSI here was just about 42. Now that's still a bullish zone for the RSI. So this lower line is indicating or it's showing us where this support is. And if the RSI were to break that support, we would most likely be seeing a very heavy move to the downside. Okay, so on the SPY chart, we were looking at some, candle signals and also classical technical analysis with support areas and resistance areas. So now let's look at some of the harmonic patterns that have formed and completed. And so going back here, there was actually a butterfly sell up here, butterfly buy down at the bottom in October. Market formed an A, B, that's a C to D leg. It's extended just a little bit past into resistance level, have moved down, and then notice how it comes back up and it retests that level. And from here, we now have an A, B, C, D buy pattern. I'm going to show you another chart of how I'm kind of putting all the pieces of this analysis together. So we've had today, we had a bounce to the upside from this A, B, C, D buy. Now the low of that bar is 42.77. That's on the December 2023 futures in the S&P. That's an important low to hold, not only because of this pattern, but with one other classical technical analysis that I'll show you. So here we have a harmonic pattern, and so let's look at something on the classical technical analysis. Notice here how, again, the RSI is still moving to the downside. This level right about here, this is a bullish level here. Right down here, still considered a little bit, it's not completely bearish. Usually moves, well below this line, or very, very bearish. So we really want to watch and see how the RSI, if price comes back down towards that 4,100 to 4,200 level, we want to see how price is holding and how the RSI is holding as well. Okay, now let's move to a daily chart. This is a little bit different set of charts. Uh, here there's a couple of trend lines that are coming up. So let me tell you something about these trend lines that are here. We're going to be focusing on these ones, moving from low to high. So I've got two trend lines drawn here. And in Constance Brown's book of her technical analysis, I don't have the is it Trading for Professionals? Anyway, I'm sorry, I don't have the full title right here. But she says when there's a very emotional bar, like there's a very emotional bar here up to here, then you can sometimes start your trend line from the bar or candle that's just behind it. So that's what I did and extended it out. And you see that that ends up coming over more of the closes and opens and then extends up to here. And then here's also the classic trend line, taking the absolute low, coming across the next low and extending it up. And they end up just about in the same place, so we've got some support. Sometimes that will give enough of a difference that you want to pay attention to it. So this trend line, which has also been on my chart for, this one's been on here for quite a while since this level here was able to extend it out. This one has been on since this touch back here in March. Uh, so you can see that the price just came down and tested that trend line. Generally, when you get a first test of a area, a trend line like this that's being well watched, generally there will be some reaction in the up to the in the opposite direction. So we've had a down move, first test of this trend line, and now we've had a rally to the upside. However, if we look at this area is really important. That's where this low of this candle is because of this gap to the upside. This pattern formed shortly after the breakout above 4,200. So a lot of buying came into the market, a lot of strength in the RSI, formed a flag, and then a gap to the upside. First pullback, and that created this support zone here. So now even this low right here, which has closed that gap, that price level is just above 4,300, about 4,302 and a half. The high on that, that's going to be an important level to watch. So you can see how that lines up with here and with here and the touch of that trend line. Now this candle was a long candle to the downside. So many times the retracements back into candles such as these will be right around the halfway point, and that's just about where we've ended up at the close of Thursday, September 28th. However, there's still this broken horizontal trend line. You have kind of a head and shoulder pattern here. We'll look at that a little bit closer. So possibly even a test there. Now, if price were to come back up above here, I think I'd have to question this formation, but still be keeping an eye on these trend lines. Okay, looking now at the head and shoulder pattern on a daily chart on the S&P 500 futures. So this would be left shoulder here. Notice there was an A, B, C, extended D up to the completion, and little butterfly cell pattern was in here. Here's an A, B, C, D cell pattern after this first drop that formed the right shoulder. Smaller time frame, we could see another little butterfly in here as well. So we can see where, if this is the neckline here, then the market has broken that, possibly a test back up to that level right around 4350-ish, 43, just above 4365 in that area. But if we do the measured move for this pattern, we can simply take the high of it and we can just come down to the low of the pattern and then project that down as the measured move. Okay, down to about here. So this is coming back down into between that 4,100 to 4,200 level of support. So the 4,200s where the market finally broke out to the upside. But look at all of this here too, right around that 4,100 level, even back as far as May 2022. The market has tested that level many, many times, and it's right around that 0.50 retracement from the October 2022 lows to this high. So for the market, I think to still be very, very bullish. I think that, holding the retracement level in here would be probably a good sign. But I want to also check on this remember the ABCD pattern that I showed you today. But notice where these CD legs, so you have A, B, and then C, you have a retracement, then the CD leg. So many times these are equal in length, but a good percentage of time that CD leg can extend and be longer than the initial leg. Now use the Fibonacci extension ratios of 1.27 and 1.618 to help me determine where those extensions might go if they do extend beyond the 1.0. So I'm seeing here that the 1.27 is coming in right about at that 0.382. And the measured target of the head and shoulders is coming in very close to the 0.50 retracement and the 1.618 extension of this C to D leg. So there's a couple of levels to be watching for if we do see a turn back to the downside and we exceed that low. And the last chart we're going to look at now is on a 60-minute S&P chart. So we've gone through several time frames today. So we can get, again, a little bit different perspective. We don't see as clearly on this chart. We don't see as clearly a head and shoulder pattern on it. We can see that it would be here, and then the head would be here, and the shoulder looks quite different on this. So I'm not even sure on this chart I can call that a head and shoulder pattern, because I think what happened previously was, and this doesn't have Globex data on it, so that's why we're seeing it a little bit differently, but we can really see where some of these gap areas are. So you want to see if the market retraces back to the upside. Maybe the market comes back down, does a retracement from that low that was made Thursday. A retracement turns back up and forms a ABCD Gartley sell pattern. So we can see where those extensions are as well. So it would just depend where that retracement would come down. So if a retracement comes down and takes that low out, then this pattern would no longer be valid. And if you want an update on that pattern, if you're not sure, just send me an email and I'm happy to tell you, is there a pattern forming there or not? I'm happy to tell you if it's still valid or not. So there was the breakout to the downside out of this kind of range that formed, false one to the upside, real one to the downside. Notice the test back up at 4,500. So that would be a pretty big resistance area right now. We have this gap level 442 and down here for just above 4,400. And again, let's check a retracement on here and see if we can line up a couple things. There's also these lows right here, these lows. So that means these are important to watch because the market rallied from this turn to the upside, retracement to the upside. So buyers came in. So right now they're underwater. They're losing money here and a little bit here. And and also right here. And so as the market rallies more, some of these buyers might be willing to get out of the market there. So here's also I'll squish this up a little bit. So here's that 4,200 level of support that we were looking at. And so I'm really going to be watching that level in between 4,100 to 4,200. So thanks for watching today. I know a lot of people are just kind of right now wondering what's going to happen in the market, but I think there's some really good levels in here to watch. And again, we were combining classical technical analysis with some of the harmonic patterns and some of the Fibonacci ratios, including some of the extensions. So once again, I'm Leslie Jouflas, and feel free to send me an email. I generally try to look for comments that are put in and try and answer any questions that I can uh, in the comments below. And I think you'll find my email. If you didn't catch it on the first slide, you'll find my email in the information below. Thanks for watching, everyone.